Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is August 30th, 2023. This is the Kickstart video where I take a look at three major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar. So let's get started. We had GDP come in lower than expectations. Also saw the PCE data come in a little bit weaker than expected as well, and that is leading to yields moving back to the downside after being higher earlier. The two-year yield is down minus 3.9 basis points. The 10-year is down minus 1.8 basis points. They were higher earlier in the day, and that is leading to the dollar moving lower. Taking a look at the euro versus US dollar, if we look at this hourly chart, we're seeing the price trading to new session highs, and that the price is approaching this key 100-day moving average. That level comes in at 1.09257. Looking back in time, the price high in trading last week also came up to that 100-day moving average and found willing sellers against that level. Go back to this day right here. The price also moved up to the 100-day moving average, moved just above it, and then rotated back to the downside as well. So there is the last three attempts to cross over that 100-day moving average has found willing sellers. So while trading at a key level here, if the price were to move above that level, it would open up the door for a run toward the 61.8% retracement. That's of the move down from the August high to the August low. So that comes in 1.0950. That would be then really the next key target on the top side on a break above that level. However, if the sellers do lean again against this level and get below this 50% retracement and this swing area through here, which has a number of different swing lows and swing highs all through this period right through here, the price could see a rotation back down toward our high price from yesterday and earlier high price during the European session near the 1.0891 level, and we'd see what happens against that level. So right now, key test of the 100-day moving average. We'll see what happens at that level. Will sellers lean once again? The history is there for that to happen. Let's take a look at the dollar versus yen, and this too is moving sharply to the downside after rising in trading here today. We had a wild day yesterday where the price moved higher and then fell sharply as yields moved lower after the weaker U.S. data that took the price below the 100 and 200-hour moving averages. In today's trading, what we saw the price start to move higher in the Asian session, get it back above the 100-hour moving average and find support buyers against that moving average here, here, and here, pushing the price above this swing area through here and up toward what was fairly a swing level up here near the 146.554 level, and we found willing sellers against that level. We broke below the 100-hour moving average, or back below the 100-hour moving average in the early New York session, and the data today has sent the price even further to the downside, with the 200-hour moving average rebroken. The low price from this day right here, which I guess is last Friday's trade, 145.72 would be targeted, followed by the 61.8% retracement on further selling. If this is a failed break right here, we're back in between the 100 and 200-hour moving averages, where we can expect the market to maybe settle down and trade in between those two levels as we wait for the U.S. jobs report, which is scheduled for 8:30 on Friday. We still have to get through Thursday, of course, but that would seem to be the neutral area ahead of that report. Also near the 50% retracement of the, I'm not sure if this is the August, no, it's not exactly the August trading range, but of the last move to the upside at 145.95 in between those two moving averages as well. Let's take a look at the sterling versus US dollar next, and we have it on the 4-hour chart. We are breaking above this 100 bar moving average on the 4-hour chart. If we look at last week's trading, the price, the last 2, 3, 4 tests against that 100 bar moving average found willing sellers before moving to the downside and trading. This week we traded up to the 100-day moving average in trading yesterday, and again today and backed off against that level before breaking above it in the early session here today with the dollar weakness. So we also now above the 100 bar moving average, and that increases the bullish bias here from a technical perspective. Looking at the hourly chart of this currency pair in trading here today, the move to the downside in early Asian sessions did find support. Buyers near the 100 bar moving average before moving to the upside. You can see that the 200-hour moving average found resistance here before breaking above that level more recently in the current hourly bar, and it's leading to the surge to the upside. So we'll watch the 200-hour moving average at 126.69 for support. Now that's a risk level. Also this swing area through here, again, that is more developed off of the 4-hour chart. Look at this area through here. Also the 100 bar moving average in the 4-hour chart. All those levels come into play here near the 126.94 level. Again, the 200-hour moving average is at 126.69. So 94.69. Those are the two levels of support now for the strong versus US dollar. As long as the price remains above those levels, the bias is more bullish. So there you have it. A look at 3 of the major currency pairs to kickstart your trading day. My name is Greg Mikulski. Good fortune with your trading. Bye-bye now.